Smart Silver Stacker here. Welcome to another Stacker live stream. Got some interesting stuff to discuss with you today. We've got a forecast from JP Morgan that we will be seeing record high gold prices sometime in 2024. So I want to kind of delve into that forecast that they have issued here for the precious metals and silver as well. They mention both metals in this forecast and they're anticipating higher prices for both of the precious metals. And I want to dive into some of the factors that they believe will trigger this surging gold price in the next year. And also, I want to cover some factors that they didn't really dive into, but which I believe will contribute to higher metals prices, and which really, when you put it in the context of everything that's going on, I think that their forecast, when you look at the numbers, it's actually pretty conservative. So before we get into that, make sure that if you're stacking some gold or silver, you check out sdbullion.com, today's video sponsor. Right now, new customers can get gold or silver at spot by visiting sdbullion.com/new. And if I were in the business of doing some stacking right now, if I wanted to get my hands on some more metal, I'd probably be taking a look at this constitutional silver, because one of the things we've seen is junk silver premiums have come down a bit recently. I know they're not down as low as they once were. The days of getting 90% silver for close to spot, I think those are past, but we have seen a bit of a decline in the premiums for junk. So I think it's a good thing to be looking at. Of course, not financial advice, just what I would probably be stacking right now. So let's get right into this forecast from JP Morgan. Oh, and by the way, if you're tuning into this live stream, a huge thank you for tuning in. Please do smash that like button. Help get this information out into the algorithm. It really helps the channel, and I appreciate it. So here's the headline from Bloomberg regarding this forecast from JP Morgan's from last week. JP Morgan sees gold charging to records in 2024 as Fed cuts rates. And so they are anticipating that sometime, probably the next year, the second quarter of next year, the Fed is going to be cutting rates, and that is going to drive the price of gold and also the price of silver much higher. Excuse me. So they do put a number on it. Their forecast is for a gold price of $2,175 per ounce by the final quarter of 2024. Now, that would be a record high gold price, but only nominally, not in real terms. And that's why I view this forecast as honestly being somewhat conservative, because, the picture that they paint for us here, we've got the Fed potentially cutting rates as early as the second quarter next year. They do mention that the U.S. could be headed towards a recession, but unlike other commodities, which may see some downward pressure as a result of a recession, JP Morgan is telling us that the deeper the recession in the U.S. is, the more likely we are to see higher gold and silver prices, because the Fed will be forced to do more dramatic rate cuts in the event of a serious recession. Also, they point out that central banks around the world are continuing to stack gold at a near record pace, and that is contributing to physical demand. And of course, if we're stacking metal, I don't think too many folks watching here are putting too much money into futures contracts or paper gold or silver. Although, if you're trading, there's nothing wrong with that. But, be like a central bank. That's how I like to get my hands on my metals, the real deal, the physical metals. And I think that, the Fed very likely is going to be a lot more dovish within the next year or so than the markets are anticipating. And I really do think that will drive prices much higher. And then the final thing that JP Morgan mentions here is geopolitical uncertainty and sort of the global de-dollarization. And I don't mention the de-dollarization word specifically, but they just say geopolitical factors could drive more folks into gold. And I see some folks saying hello in the chat there. Hey, everybody, thanks for tuning in. I see some folks saying they're stacking more gold and silver. Me too. Me too. Now, when we talk about record gold prices, I mentioned that 2175 would really just be a nominal all-time high. Now, what do I mean by that? Well, gold has actually been higher than that within, fairly recent history If we go back to 1980, gold hit 200, or I'm sorry, $850 in January of that year. And if you adjust that number for inflation, just using the CPI, which probably, dramatically understates the real inflation we've experienced since then, that would give us a real all-time high of gold for gold of about $3,147. So even if we do hit 2175, I think that we still have a lot more room to move in gold in this bull market, because I do believe that at some point in the relatively near future, we are going to be hitting real all-time highs, and this nominal all-time high of 2175 will just be a stop along the way. Now, here are some other factors that are set to drive the price of gold much higher. We're just going to kind of go through a laundry list of things here because, there's just so much in this economy that is going to be driving inflation much higher, devaluing the dollar. I mean, it's just the writing's on the wall. And if you can't see that, then I think you got some blinders on. Now, this is a headline from Reuters from July 31st. Auction sizes set to increase at U.S. Treasury refunding. So this is the Treasury auctions as the U.S. continues to pile on massive amounts of debt. The Treasury is going to begin increasing the size of its bond auctions. And they mention in this article here from Reuters that the problem is that the deficit is surging because tax revenues are declining, whereas spending is increasing. And so, that's a formula for more debt, obviously. The economy has become so eviscerated at this point. The real economy, this is the, record-breaking economy, the Bidenomics economy, the greatest economy we've ever seen, right? I mean, we've heard that before, but that's not what's going on. Tax revenues are declining, and the only thing really propping things up now is the massive amount of government spending, which ultimately is going to prove to be enormously inflationary. And here's the thing. The interest on the U.S. national debt is getting out of control. It's at a record high. The debt itself is exploding. The Treasury is being forced to increase the size of its auctions. And this can only result in one thing ultimately, and that is the debasement of the currency. Now, I know we look at the U.S. national debt clock quite a bit, but I mean, it bears repeating that we're at 32.6, nearly $32.7 trillion now. I mean, it was just a couple months ago, we were at what, 31.6, 31.7 when we had the whole debt ceiling debacle unfolding. And here we are, we'll be hitting 33 trillion almost certainly by the end of the year. And this kind of debt, it can only be paid off in devalued currency. I mean, sometimes you just have to look at who benefits from things, And if you are a massive debtor, and the U.S. federal government is the biggest debtor of them all, then the devaluation of the currency actually benefits you, because you get to pay off that debt in currency that has lost its purchasing power. And so, sometimes it can be easy to ascribe some of this stuff to just incompetence, but then when you look at the way the incentives are aligned, you can see that inflation is very likely where we are headed. That is what the government is incentivized to do at this point, is to debase the currency so that they can pay off these enormous debts. And it's not as if this would be an isolated event in history. I mean, this is sort of the status quo for empires, especially empires at the terminal phase of their existence. And, while the U.S. empire isn't done, it's starting to get a little long in the tooth, and we're showing a lot of signs there. I mean, just one more number to look at here, the debt per taxpayer, $253,000 per taxpayer. If you look at the unfunded liabilities, I mean, what the government's actually on the hook for, what is it now? $192 trillion down there. That's everything that they have to pay, the Social Security, the Medicare, the veterans benefits, the government pensions. And look, I'm not saying that people don't deserve that money. I know, in a recent video, I referred to Social Security as an entitlement program, and people get real upset about that. They say, I paid into it, it's not entitlement. Well, first of all, the definition of an entitlement program is just a program that guarantees benefits to people. I mean, the definition is agnostic as to whether or not you paid into it or not. So Social Security, just in the strictest definition of the world, is an entitlement, and all these things are. But the problem is that we don't have $192 trillion. And so it's going to likely play out just like Alan Greenspan told us, the former chairman of the Federal Reserve, when he said, we can guarantee these payments in any amount on any timetable, but we can't guarantee is their purchasing power. And so we are headed towards a significant US dollar devaluation. And so, when you think about it in those terms, it's not like the price of gold, or the value of gold rather, is going to go sky high. I mean, this stuff just kind of holds its value. It's the dollar which is going to be devalued. Now, I do believe that as that occurs, that you may see some real purchasing power increases for those holding gold, but that's not really the driving factor here. The driving factor is the devaluation of the dollar. Now, this one is another headline from Reuters from just a couple days ago. You have probably seen this one. Credit rating agency Fitch cuts U.S. credit rating to AA plus. The Treasury calls it arbitrary. Yeah, what? Why would that be arbitrary? I mean, or why would they cut the credit rating? Right? You've got $32.6 trillion in debt. You've got record deficits. You're borrowing more and more. But yet it's completely arbitrary that they have cut the credit rating of the United States government and the Treasury. Now, I want to say this about this cut to our credit rating. It is sort of arbitrary in a way. And if you think about it this way, that it really is pointless to rate the Treasury's credit because we can always print more dollars. So, I think that it is a given that we will always be able to pay our debts in dollars because we can just create them out of thin air. However, and in that sense, the U.S. Treasury should have a AAA rating because it's always going to be good for it 100% of the time, no matter what. But the other thing you have to think about is that we are on almost a 100% guaranteed course towards a default by inflation, because if you pay off all of your debts in worthless currency, it's a distinction without a difference, really, to call that anything but a default. It is just a default by another name. And that almost seems completely baked into the cake. Now, I did find this quote kind of amusing from the White House press secretary. It defies reality to downgrade the United States at a moment when President Biden has delivered the strongest recovery of any major economy in the world. Now, I mean, if that's not just like a Ministry of Truth moment, I don't know what is. And, to be fair, neither party has a monopoly on economic malfeasance and destroying the currency, but certainly the current administration is making great strides in that direction. So keep in mind, this is a live stream. If anybody has any questions, anything you'd like me to cover, feel free to put them in the chat. Sometimes I'll go on some, tangential rants about anything that anybody has any questions on. I do appreciate everybody tuning in. I see some folks saying there, Michael K, keep up the great work. Thank you. Well, thank you, Michael. Appreciate you tuning in. I like to go to the chats here periodically in the live streams. I mean, it's sort of the thing that differentiates these live streams from the more traditional produced videos. And again, just a huge thank you to everybody tuning in. Please do smash that like button, share with your friends, tell them about Sound Money. It really helps the channel out, and you might help some of your friends too with some information. Okay, so the next thing I want to get into here is this story. This is from Morning Consult Pro. This is from yesterday. Quarterly survey of household emergency expenses and decision making. So this really goes to show you just how great this Bidenomic economic recovery that we're enjoying at the moment is. And according to the survey here, only 46% of Americans could pay for an emergency expense of $400. A $400 emergency expense. Only 46% of Americans have enough cash to pay that. Now, some respondents said that they could pay using like credit cards and that sort of thing. A pretty good chunk, 19%, said they couldn't pay it at all, no matter what. And so it's fairly interesting that we've got the White House press secretary telling us that we're in the greatest economic recovery of any major country in the whole world, and yet less than half of our citizens can afford a $400 emergency payment. I mean, think about that. And this is just another sign that we're going to have to see the Fed stimulating the economy, sending out stimulus checks. That won't just be the Fed, that'll be the government. But the point is here, people are going to need a bailout because the number is declining. You can see that back in Q1 of this year, 47%. Q2, a little boost, 48%. Now, only 46% of people can afford this $400 emergency payment. And, $400 these days is really not very much money at all. I mean, if you were talking about 20, 30 years ago, that might be a nice chunk of change. But what does $400 really buy you these days? I mean, not very much. So, not only do people have very little in the way of savings, the savings that people do have been completely devalued by the ravages of inflation, which, supposedly they tell us it's coming under control. We're going to get into some numbers here in just a moment to kind of cast some doubt on that, whether or not inflation is coming down or if it's headed lower. But, the American consumer is not strong at all. So we're going to have to see Fed intervention, money printing, unless they just want to, let everything crash and burn. But that's not going to happen. I mean, we saw what happened in 2020 when the economy begins to show more signs of weakness. When things get really bad, they're going to be sending out anti-riot money checks just like last time. And, it's going to result in more devaluation of the dollar, more inflation. And that is why gold is definitely headed towards record high prices. And the silver price also is likely to catch a major bid in the very near future. These safe haven assets are just tremendously undervalued today, especially silver. Now, this is from Lending Tree. Here's a chart of total outstanding credit card balances for the past 24 years, going back to 1999. And you can see not only have Americans had their savings wiped out, only half of Americans or less than half Americans have $400 put away. But here we have record high credit card debt. Last I saw, we were close to $1 trillion. I think that report was a couple months old. Excuse me. So very likely we are now surpassing $1 trillion in consumer credit card debt here in the US. And this is at a time when interest rates are headed higher. So not only is the amount of debt headed higher, but just like the national debt, which has seen the interest payments explode throughout the past year, the interest payments on these credit cards are also through the roof. And again, this is just another sign that this economy is on borrowed time. How much longer can this really go on? I mean, eventually you're going to see consumers begin to default on this debt because they will simply be at their wits' end and completely tapped out financially, and they just will be forced to default because, unlike the government, consumers don't have a printing press where they can just pay off their dollars with printed or their debts with printed money. And so, when we see these defaults begin to rise, begin to increase, which we're already seeing across consumer debt, there is going to be a lot of pain among these financial institutions which have issued this debt. And we know that they're already in bad shape. We're in the biggest banking crisis since 2008. We're in the midst of it. So when those debt issuers begin to get defaulted on, that is going to be a huge problem and very likely going to result in, once again, Fed intervention. They're not going to let things burn down. I mean, maybe they will. I don't know. It's possible, I guess. It's just that, they've never done that before. It's very hard to find any examples historically of over-indebted, bloated governments that just decide to let everything burn down without trying to solve the problem with the printing press. Now, I mentioned that inflation was not going down, and or rather, maybe done going down. And this is part of why I think we're going to see higher commodity prices across the board. Is that inflation is going to be picking back up, and headline CPI, I think in the June number was about 3%, so still well above the goal of the Fed of 2%. And that headline CPI, that includes volatile things like food and energy. And just look at what the price of crude oil has done over the past month. This is the chart for West Texas Intermediate crude oil, up 15% month over month. I mean, that is a startling move in such a short period of time. Now, of course, they have the headline CPI versus the core CPI because the price of food and energy tends to be volatile. But now we're heading into this time when the price of crude oil is way up and it's moving up at an incredibly rapid pace. And this is going to lead to higher inflation across the board. I mean, the price of oil touches just about everything. I mean, gold and silver themselves require a tremendous amount of energy to extract from the ground to produce these things. So when you see the price of oil go up, that means the mining cost goes up. That means that either the price of the metals has to increase or production will decline. And then, decreased supply will lead to higher prices. So crude oil absolutely has a knock-on effect here. And crude oil had a tremendous drawdown from the highs of last year to around June of this year when the price was down below $70 briefly, but now we're way back up above that. And look at this. That is not going to happen. That's not going to change anytime soon. This is another one from Reuters. Saudi Arabia extends 1 million per day oil cut, may deepen it in the future. And so they've had this cut in place for the past several months. It's part of why we are seeing the price of oil rise the way it is. In addition, Russia has announced another 300,000 barrel per day export cut in September. So the OPEC plus countries, that includes Russia, Russia, the world's second largest exporter of fossil fuels after Saudi Arabia, they have extended their cuts, I believe, through sometime in 2024. And Saudi Arabia has voiced the conviction to potentially do the same thing. I mean, it's in their interest to have higher oil prices. That is one way that these oil exporting countries are kind of at odds with the U.S. Now, we don't import a lot of oil from Saudi Arabia. China buys most of their oil, but it's a global market. And so when Saudi Arabia cuts production, I mean, it means higher oil prices here in the U.S., and that means higher inflation. And the Strategic Petroleum Reserve, that's something that President Biden had been releasing oil from for some time now. In fact, that was a big part of why we saw the decline in the price of crude oil. Well, those releases are, at least for now, done. There were plans, of course, to restock the Strategic Petroleum Reserve, which is now sitting at the lowest level, I think, since sometime in the mid 80s. I mean, it's basically been cut in half. It was somewhere over 600 million barrels of crude oil. Now we're somewhere just north of 300. And there were supposed to be plans to restock it. But recently, the Biden administration announced that they are delaying the plans to refill the SPR. Now, the stated reason for that, according to this press release from the Associated Press, is that they want to make sure that taxpayers get a good deal. Yeah, I mean, you can't make this stuff up. The Energy Department canceled a planned purchase of 6 million barrels for the Strategic Petroleum Reserve this week, saying it wants to secure a good deal for taxpayers. Well, price of crude was down under $70. It was in the high 60s. Why didn't we refill the SPR then? And here's the reason why. Because as soon as they go into the market and try to buy this oil to refill the SPR, it's going to drive the price of crude oil way up. And they know that inflation is a hot button issue politically right now because, of course, the American public is being eviscerated by the devaluation of the dollar. We're losing all of our purchasing power of our currency. The cost of living is skyrocketing. The poorest among us, the most economically vulnerable members of society, are the ones who suffer the most in this inflation as the cost of basic things like food and gasoline rise. And, they're not trying to contribute to that. But if they really wanted to fight inflation, of course, they would cut the massive deficit spending. But no, they try to play these games, we'll release oil from the SPR, we'll delay refilling the SPR. But all of this, it's like putting a Band-Aid on a gunshot wound because they continue to spend hundreds of billions of dollars that we don't have every single month. I think last month's deficit was something like $212 billion. I mean, it's incredible, especially when you look at history. It took something like, I forget the exact number, but I think 205 years to rack up the first $1 trillion in debt here in the US. So more than 2 centuries to spend $1 trillion that we didn't have. Now we're doing it, every couple months. So yeah, I mean the price of gold, sure, it's going to hit 21.75. I mean, it's going to go much higher than that. It's obvious that it is. I mean, it's crazy to me that the mainstream investor is not piling into this stuff yet, given what is occurring. But look, I mean, it's an opportunity for us stackers. If you're paying attention and you see the writing on the wall, I mean, there's all these problems in the economy. And it's like the leadership is just doubling down on it. They're not doing anything to fix it. They're just doubling down on the same policies that created the problems in the first place. Um, yeah, it's absolutely wild. Boone Master Sergeant there says, "What if the moon had gold on it?" I don't know. Maybe the moon does. I've heard folks talk, especially I think the Bitcoin crowd. I've heard them mention that like a gold asteroid could come and we could mine it, and that would drop the price of gold significantly. I always think that's an interesting argument. Yeah, if there is space gold, I'll just throw this out there sort of as one of these tangential things. It's probably going to be very expensive to extract. There's deposits of gold on Earth that we know about that we don't extract because it's not cost effective yet. So, you know, I'm not too worried about a space gold source. I know that's not what you were saying, Boone Master Sergeant, but I just think that's kind of an interesting aside. Someone says, "What happened to Bitcoin today?" I don't know. Put it in space is fake. That's funny. Put it in the chat if you know what's going on with Bitcoin. I haven't been paying any attention to it. Space is fake. Yeah, I mean, I love the flat Earth stuff. The just crazy, ridiculous conspiracy stuff out there. I think a lot of that stuff is kind of put out there as a red herring. You know, because a lot of the stuff that the powers that be do behind the scenes is just as crazy. It's just documented. So they put out all this crazy conspiracy stuff to kind of hey, look over here, there's flat Earth, or oh look, there's UAPs. That's the new one, right? We've got alien spacecraft flying around. I mean, who knows? Maybe there are. I don't know. But it's interesting that right as we're on the verge of economic collapse, the government starts having these congressional testimony and inquiries into space aliens. I find that to be an interesting coincidence. Okay, one more news story for all of you today. And this is more of an update than anything else, although this could certainly be a factor that drives the price of gold much higher in the near future. I've covered it extensively on this channel. There's been a lot of coverage of this. It's about the BRICS summit occurring in August. Fairly recently, we had an Indian finance minister and also, I believe, a ambassador from South Africa tell us that there will be no BRICS currency in the works at their August summit to be held August 22nd through the 24th. However, this is a press release from the TASS news agency from July 29th, in which we are told by Deputy Prime Minister Alexei Overchuk in Russia that maybe the leaders will decide to instruct the relevant expert departments to study this issue. That is the idea of a BRICS currency. And this is the quote: the BRICS leaders will hold a meeting soon where they may touch upon the settlement system issue. Perhaps the idea of creating a basket of currencies based on a certain payment unit will also be discussed. And then here's a hint as to what we're actually going to see. And I think that this is very likely what will actually happen at the meeting. Perhaps the leaders will decide to task the relevant expert bodies with looking into the matter. Clearly, it's a very difficult issue. So I just thought that was an interesting update on this whole BRICS currency thing. And I think that this is very likely what we will see. I think that there's not going to actually be the release of a gold-backed currency or anything like that as early as August, but they may be setting the groundwork for it. They may be setting the gears in motion. And who knows? I mean, this might be something that we see a decade from now. It might be something that we see next year. I think a lot of that depends on how bad the geopolitical situation devolves. Of course, we've got Africa, potentially the next battleground in this World War III conflict with the coup that has taken place in Niger. And I'm going to be doing a video on that and its impact on commodities very soon. I believe that'll be released on Monday. So keep an eye out for that because that should be a good one. It's a lot, far too much information to get into in this live stream, but just giving you a heads up that that is on its way. And so, all of these factors that we covered today, this is why I do think that we are headed towards new all-time highs in both gold and silver. Very interesting. In order to get a real all-time high in gold, like I mentioned, you have to go up to about $3,147 if you adjust for inflation. Although, a real inflation-adjusted number, if you use like, John Williams Shadow Stats numbers, for example, would give you a much higher price target for gold if you're looking for a new real all-time high. But in silver, even if you just use the CPI, it's close to $200 would be a real all-time high for this metal. And so, both of them are tremendously undervalued. JP Morgan, you got to take things that they say with a grain of salt, of course, because they have their own agenda. They're not an unbiased source by any means. But when they forecast that gold is likely heading to record highs, I think the correct interpretation here is that mainstream investors may soon be getting clued in to just how undervalued gold and silver are at today's prices and how they offer a safe haven from all of this incredible economic, malinvestment, malfeasance, the just out of control spending, the devaluation of the currency. And when mainstream investors decide to move into precious metals, especially physical metals, I mean, we've kind of gotten a preview this year of what that can look like when we saw in March all of the major online bullion dealers getting, huge backlogs of orders, getting bogged down. I mean, the supply unavailable. And it's like, now when you can buy bullion, when you can get your hands on it without waiting, weeks or months to get it, now is the time because when that really occurs, when people really get an idea of how bad this next economic collapse, economic cycle is going to be, there's going to be a move into the physical metals that is going to make this March look like child's play by comparison. Again, that was just a preview. And honestly, I mean, it sounds perhaps like scaremongering, but I don't mean it that way, but it's just true that you might not be able to get your hands on this stuff. I mean, or if you do, it's going to be at incredibly exorbitant premiums. And really, I mean, when that happens, that's when the metals could head into bubble territory. That may well be a time to take some money off the table, to take some profits. And I just think that we should all not get complacent. Take a look at what's going on around us. One thing I hear people say a lot in the comments is, oh, people have been saying this about gold and silver for decades. And the thing is that, it's been correct for decades because this crisis that we're facing, it's been in the works for a long time. I mean, really, it's been in the works for a century plus. Mostly, it's been in the works since 1971 when Richard Nixon ended gold convertibility. I mean, back then, gold was $35 an ounce. Today, it's knocking on 2,000 and probably likely to go much higher in the very near future. And the fact that we're close to the end game now, at least, closer than we were, of course. I mean, that's obvious, but it seems like we're getting real close, and that it's hard to say how much longer this system can go on. But I mean, now is such an opportune time to stack. I mean, especially silver because the price is so low. I just think it's the opportunity of a lifetime. Again, I'm not giving you financial advice. I'm just telling you how I view things. But I think that probably the real thing that we're going to regret in the future once this takes place is we'll just be looking back and say, man, I wish I'd bought more. I recently stacked up some 90% silver from SD Bullion, these quarters. I showed you those. Still haven't taken them out of the roller. But I think that this is probably a great opportunity right now. The junk silver, they're not making it anymore. Plus, I just love junk silver. It's got a great sound to it, the clink of real money in your hand. It just sounds different than the cupro nickel clad stuff. And even if you're not stacking 90% constitutional, I mean, I don't know, maybe the premiums on that are too rich for your blood. I think it's worth it to me at the moment with the way the prices are. But you can always get something like a generic Buffalo round. I mean, you can get these at a very low premium today. Premiums on generic stuff have come down. You can get bars, you can get coins, you can get, gold backs. Maybe you want to get some gold backs, you want some fractional gold. Doesn't matter because all of these assets have one thing in common, and that is that they can't be printed They can't be debased by the government. Sure, the supply grows very slowly. Someone asks, any comments why platinum is undervalued? Well, platinum's a weird one. It's a very volatile market. I think part of it is the trend towards electric vehicles. A big portion of industrial consumption for platinum has to do with catalytic converters. But that being said, I don't think they're going to stop making internal combustion engines anytime in the near future, even though, there is going to be a push for EVs, which I think will be good for silver. But I do think platinum is pretty undervalued today. I mean, if you look back at like 2008, the gold to platinum ratio was like 2 to 1, meaning for 1 ounce of platinum, you could buy 2 ounces of gold. And today it's reversed. And for most of the 20th century, platinum was much higher than gold. So I do think platinum is a good metal to stack at today's prices. A little more speculative than gold and silver because it doesn't have quite the monetary history, but it does have a lot of the same properties. And part of the reason it doesn't have the same monetary history is because it hasn't been around as long. They didn't fully isolate and mint silver, or rather platinum, I think, until the 18th century, something like that. So it just hasn't been around as long. But I do like platinum. It's not a core holding for me, but I have a couple ounces, and I think that if you're feeling kind of speculative, but you want to have a hard asset in your hand, it makes a good way to diversify your stack. I've got this American Platinum Eagle here. I mean, honestly, you're probably with platinum best off just sticking to generic bars. Someone says platinum is going to spike because South Africa is wrecked. Yeah, that's very possible. That's the thing, supply disruptions. There's a steady industrial demand for this as a catalyst, both in catalytic converters and in other areas of industry. And right now, South Africa, they're having all sorts of problems with their power grid. They have labor problems there, a lot of disagreements between labor and the mining companies. And they make, I don't remember the exact percentage, but some huge portion of world platinum supply, like 80% or something like that. So if they get cut out of the market for any reason, yeah, you could see the price of platinum spike up in a big way. So I like it. Also, potentially kind of way down the road, but if we get hydrogen vehicles, I believe that platinum has some applications there in fuel cell technology, that sort of thing. So it's a unique metal, and there's not very much of this stuff. That's really the big thing that platinum has going for it. I like things that have limited supply, like junk silver has limited supply. They're not making it anymore. So it's got that going over it in the sense that, they're still producing silver, but they're not producing junk silver. So you've got something with a limited and shrinking supply. For platinum, they are still mining it, but something that I've seen is, you take all the gold that's ever been mined in history or that's above ground. I think it's about 6.7 billion ounces. It fills up something like 3 Olympic swimming pools and then some. If you take all the platinum that's ever been mined, it only comes up to your ankles in 1 Olympic swimming pool. So, it's got a very small supply. You can just go look at the COMEX numbers for what they have in their inventories. And, they'll have, millions and millions of ounces of silver. They have quite a bit of gold, but their supplies of platinum, I want to say it's just like a couple 100,000 ounces, if that. Again, I don't have it in front of me, but I know that the supply that's available out there for traders of platinum, very small, very small. Someone says junk silver good. I know it's like 90%, but not sure how I feel about them. Well, that's okay. You don't have to stack junk silver, more for the rest of us. I do like junk silver a lot, though. I mean, it's got a lot going for it. As far as fractional silver, that's, sub 1 ounce pieces of metal for potential trade or barter, it's probably the best thing you can find. It is 90%, so that means it's a little more durable. And to me, the best thing is they haven't made this stuff in 60 plus years. A lot of it has been melted down. And so when you get limited supply and increasing demand, I mean, what kind of effect that has on price. It's like economics 101, shrinking supply, rising demand means much higher prices. And that is why every time we get some kind of a crisis, like the banking crisis that we had in March, the first thing to run out at all of these dealers is junk silver. I mean, there was a time in March and April when you couldn't find the stuff anywhere. I mean, maybe at a local coin shop if they had some, on hand in the back room or something like that. But all the online dealers were basically completely sold out of it, unless you wanted to pay some exorbitant pricing for what might be considered, like numismatic coins. And I think that we should all take heed of that. The junk silver is sort of like the canary in the coal mine. It's the first thing to run out of stock whenever crises a rise in the economy, and it's just a sign that, folks still like to stack this stuff. They still view it as a safe haven, and there's just not that much of it. Because what happens is when you get these crises, um, nobody's selling this stuff into the market, but everybody's buying it, and so it just drives the price through the roof. But we have gone for about 40 minutes now, kind of long for a live stream. Some great questions in the chat, though. I really appreciate all of you who tuned in, and I just wish you all the best. Thanks for watching. Make sure you smash that like button. Don't forget to like, comment, subscribe, and I will catch you next time. Stay safe, everybody, and happy stacking. Smart Silver Stacker out.